6.3, we're going to go to our next step, which is transferring all of our amounts over to either an income statement or a balance sheet. Now, the real identifier is this income statement, income summary. Everything above income summary will go over to balance sheet. Everything below income summary goes to income statement. So how I always remember is income under that goes to income statement, if that can help. And all we're going to do is just transfer straight over. So on our balance sheet, we're just going to transfer that money straight over. Same with our petty cash. Same with our accounts receivable. Now, here on our balance sheet, we have to find out, or if you remember what we had at the end of the month, but if we don't remember what we had at the end of the month, really easy to find out. So we take our beginning balance, which is 228, and we're going to subtract our adjustment, 153. So we had 75, and we're going to put that on our debit side. We'll do the same thing for our prepaid insurance. So you take your beginning balance and subtract your adjustment. So we have 250. Now remember, on accounts payable, it switches over to your credit side. 267. Same with capital, it's over here on the credit side. Our drawing is back on the debit side. It's normal balance. Again, there's nothing that's going in your income summary. Now everything below income summary now gets transferred over to the income statement columns. Again, keep them in the right column, either on the debit side or the credit side. So our cells is going to be normal balance is credit side. And all the rest are going to be on the debit side. This is where it can get a little bit confusing. Is right here, 125 is on, is on the debit side. So everything that's switched over here to the debits. Utilities expense. Now we're going to do the same thing. We're going to add up each column. Now this one is not going to add up, so please let you know that if you're trying to get them to be equal, they're not going to be. So we're going to add up each column. And then 2160. Our debit on our balance sheet, we're going to add all of them up. And we'll add up the credit side as well. Okay, check your answers, make everything's good. And we're going to go to the last step on this. It's calculating out our net income. Now, for this step, if it's a net income, that means your sales exceeded your expenses. If it's a net loss, that means our sales are lower than our expenses. So how we do this is we take our credit, or whatever number right here is larger, we're going to subtract those two. So we take this 2160 and subtract 1483, and we put it under the smaller number. So we put 677. We're going to do the same thing over here on the balance sheet. We take our greater number, subtract our smaller number, and put it under the smallest number. Now, if they're on the outside like this, they're going to be called a net income. If the smaller numbers are on the inside, right here, then they would be a net loss. And then the final step is that we're just going to add these two together, 2160, and we'll just drop down the credit, 2160. So then we're kind of forcing them to become even. So we're going to do the same thing under balance sheet and the same thing under the credit side. We're going to add these two numbers together. So again, we're forcing them to be even. Now, the way you can check this is both of your numbers on the net income row or the net loss row should be equal. If they're not equal, then you have done something wrong. So go back and check your addition or anything like that. Thank you.